Hi, and welcome to the results of year three. So we see here net profits per team have really ballooned, and for some teams, they broke the $100 million level. Most teams are above $80 million of profits earned. We still have a number of teams who are at or below the $60 million level, which is sort of the level we hit last round. So we can see a nice increase here of about 30% of net profits by most teams. If we look at the points by team, most teams are getting over the 400 point minimum that you should be achieving uh, on average each round. So we see typically the first round it's easy to make a lot of points as you're competing against old management that made a lot of bad decisions. The second round is when you're competing against your previous decisions. In the third round, again, you're competing from looking at year three results to year two results. Your year over year change is what how your points are developed. So, and some teams are able to successfully get over 600, and one team touching here about 700 points. So teams are doing very well in the point accumulation. Stock price, we have a new leader in stock price by a small margin here of about I would say that was 8 cents, but still we have a new leader from Automark to the new leader ASPAR Motors, and we had quite a number of teams that greatly increased their stock price from year to year. In fact, just about all teams increased their stock price. We have a new leader in sales coming from the back in the middle, upper middle of the pack to be number one here. Uh, with 487 million in sales, and we have this team here making a huge increase in their sales year over year. Um, that is terrific. Probably saw my response video, took some of the ideas I had to heart, and really changed up their sales and forecasting, made it much more successful. Earnings per share, we have most teams rising, if not all teams rising in earnings per share, which is good. And then if we switch back here, we see that um, current round points lead anywhere from 693 down to 129. Gross profits are now top range. The profits are 63%. We still have two companies below 40%. Now, we started at 40% in year zero. So you haven't made any progress in your profit margins. Your investors are not going to like that, and your team will suffer in points and in stock price because of that. So remember that we're trying to maximize these gross profit margins as much as possible. And where our stock price, so let's just go down here to total points. So some companies are approaching the 2,000 point range already after just 3 years of points. There's 3 more years to go. So anybody who's at the 1,500 point level or higher has an extremely good chance to get the full credit for this assignment. Now, if you're above 1,000, you still have a decent chance. People who are below 1,000 will have to work a little bit harder to get those points up to really make sure they get the full points for the simulation. Now, you have completed year three, so this is what I would have done from after reviewing my results from year two and looking at my overall score. I'd go into my assessment, review my assessment panel to see where if I need help in any area and review the advice, review my charts, specifically my performance chart to see at the very bottom. I want to see, and I can see right here that I undersold. I could have sold a lot more luxury vehicles and more um, truck vehicles. But I think I under forecasted because I didn't want to build another factory just for 100 vehicles. But here it probably wouldn't worth it even if I sold an extra 350 vehicles to build an extra plant. And I can see that I am maxing out on my um, economy and sedan. So then go to the industry, see how my competitors, what they've done. I try to get some ideas of their market potential. What is their reduction in labor costs? How are they building their vehicles? What are their overall results? So doing some research in the industry area, and then just reviewing my financials. And I'm finally ready to start year three and create the new model of my vehicles. I see that the customer expectations have gone up, the price I could sell my car has gone up, and my operational reductions have doubled. So now I'm going to try to build my car and hopefully build it in a way that will impress my customers. And I'm hoping to, yes, I'm able to increase my profit margin, which is the main thing that my investors expect is that I can increase my profit margin from year to year. And I'm making sure the features I'm offering are increasing along with the customer's expectations of increased features. And I see my profit margins up here. And you can see that even if you're buying a car and the new year model comes out, you'd expect that model to be better than the previous year. So 2020 models should have something about them that's better than the 2019 models. And that's how the car industry works. Okay, so I'm going to finish out. And now here on my truck, you can see that I'm not, even though my operations increased, I'm still not getting a higher profit margin. So I'm going to see if I can get that to be a little bit higher. All right. And it's pretty, so I can't get it as high as I want because of the increasing cost of building these trucks due to the customer expectations. And that's going to be an issue moving forward. Let's see how I do on the luxury is the same issue here. So I'm having a hard time. Um, okay, there I was able to get it up a little bit higher because the expectation range have increased, and that's is okay. So I got a little bit. So this round's gonna be difficult to really um, surpass my profit margins by a great amount because of the increased expectations. So I'm going to have to increase, this is going to be a building round for me. So I'm going to have to increase my production operational investments to help increase my profit margins in the next round. So I'm going to do the advertisements, but I'm going to do them offline because it takes so long to put together, and I'll meet you back in production in a minute. Okay, I'm in production, and I know I'm going to need to get a new factory here to get to my forecasts, and I'll need a new factory here, and I'm going to have to buy a new factory here. So I'm building a lot of factories. So let's just see where that leaves me. Oh, gonna enter the production numbers. See what kind of surplus I've generated. Okay, so I have 137 million surplus. So I'm going to go back into production now, and now I'm going to increase my operational investments. Let's see. I want to okay. So I've invested doubling my money in my operational investments. Let me finish that off. Okay, and I still have $40 million surplus, which I'm going to use some of this money to retire some debt and buy back some stock. All right. And that leaves me with a comfortable $31 million surplus, which is good in case I don't sell all the cars I forecasted. I won't have an unexpected deficit, which would make me lose points. So let me process the round and see how I did for year three. Okay, so year three, I generated 500 points. So that is a nice amount for year three. And that puts me at, if I look at, let's see, what my cumulative, if I go to industry, my cumulative points now are 2128 after my year three points are added in. So I'm doing very well on that. And you can see here that my revenues are up. My quick ratios, debt ratios have improved as I paid down my debt. I was only able to slightly improve my profit margins by 3% year over year. So that made it difficult to improve a lot of points there, but I'm still moving in the right direction. You just don't want to stay flat or move backwards. My total asset turnover was down 11 points because I bought a huge amount of assets. I think I purchased 4 factories and a lot of operational investments, so greatly expanded my assets. So it made it difficult to get my total asset turnover better, and it put some pressure on my um, return on assets also because my asset pool is so big now compared to my profits. But this will turn around next round because I've made these asset investments this round, which I could utilize next round, um, which should help to improve my utilization of the assets as I generate even more sales next round. And my return on equity and my investment multiplier was just kind of flat there. But I made some points in earnings per share. Market capitalization is up. Book value is up. My forecasts are not as accurate, so I lost a few points in forecasting, but I increased my operational investments and I maintained my surplus. So I got those 500 points, which is great. And if I look under production now, you'll see that I have some current inventory. And that's why I don't have as big of a surplus as I should have had because I over forecast a little bit, except for luxury. Everything else was over forecast and leaving me a surplus, which also increases my assets. So those unsold vehicles go into inventory, increases my asset dollars, which makes it harder to improve upon my total asset turnover or my return on assets. Okay, so that's me completing round three, whatever I would have done for round three, and now you are in round four. I hope you use these videos to help you to make better decisions moving from completing your round four. And remember that you can always use assessment to get an idea of where you're doing well and where you're not doing well and ideas for improvement. And you can always play practice games to help improve and refine your ideas before you deploy them in the team competition area. Okay, congratulations to everybody and good luck on Saturday's next simulation game. And I will be talking to you soon. Take care.